Hey guys, welcome to another episode of Block Thrasher, where we are shattering the complexities of crypto with news, commentary, analysis, and education, and of course, interviews. And today we have an interview. And I just want to start out by saying, if we get into an argument and it seems like we're really going after each other, I love this guy. He's a close friend. We love each other. We don't always agree on everything with crypto. But overall, we do. Obviously, we both love crypto and are huge fans. And not just huge fans, I mean, we just have a deep-seated belief in the idea that there is no better money on the planet, right?
And on that note, let's say, I believe I like a good debate, and I think it's one of the best tools that you can have in order to figure out the truth. And anytime you're debating or discussing, even if you're both getting heated about it, you still, the idea is we're trying to both look at it logically, objectively, both admit if the other part, if we're wrong, the other party admits they're wrong. And I think that's kind of a lost art form that they used to do back, hundreds of years ago. And nowadays people can only fight, can't even look at the other person's point of view or even show respect even with someone that has the opposite point of view and stuff. We need to start a new model of debate, discussion, or, even when people have very heated differentiating views. And,
Amen to that. I'm not always right.
Let's start a movement for that,
I'm not always right, just most of the time.
Start to be a thing. No, I know you're not always right.
So, have you heard of BitConnect, by the way? You should check BitConnect out.
Yep, I have.
Oh, it's awesome. It's incredible. Come on, man. You got to do the BitConnect thing.
Okay, I got it. Hey, hey, hey. Hey, hey, hey. What's up? Block Thrasher. Yeah.
BitConnect. Anyway, you might not know what we're alluding to.
Yeah, it was a Ponzi scheme off of Bitcoin back in 2017. Actually, I think it made in the top 10 coins, if I'm not mistaken. And there's this awesome video of Carlos Matos going crazy about BitConnect. It's one of my faves.
But, that's awesome.
Yeah, go check it out.
Brandon's always sending me great videos.
Yeah, I've got a meme play. Maybe we'll send that. I've got a meme playlist anytime, to keep me pumped up about Bitcoin. I've got like 10 videos just for that purpose only.
We'll have to do that. But speaking of Bitcoin, I just pulled up CoinMarketCap, and we are up 5% in the last 24 hours, up 14% in the last 7 days. Currently $54,000, 121. How are you feeling about that?
I'm feeling pretty good. I want us to break some all-time highs soon, but I'm feeling good.
That's right. The entire market is actually green right now. Ethereum is up 24% in the last 7 days, I think, with the release of their news about the Ethereum improvement protocol or whatever it is, or proposal. That's it.
You keep up more with that than I do.
EIP. It's like EIP 1522, I want to say. I don't have the number wrong, but taking steps to reduce transaction fees and that sort of thing. Binance is killing it. It's up like 25%. Cardano is actually starting to pump a little bit in the last 24 hours, up 4.89%. Polkadot's up 11% in the last 24 hours. XRP's up 12% for the week. Uniswap's just been killing it of late, sitting at $32. But overall, it seems like the market is definitely picking up, and that's a good thing because historically the month of March can be sort of a down month. And if you go back to the previous bull run of 2017, on March 12th, there was what they call Black Thursday, and Bitcoin lost 50% of its value, obviously. And so a lot of people sort of panicked. Yeah. And we're coming up on that because it's March 9th now, March 12th.
I entered like 3 months after that or something. It was my first time I bought Bitcoin, so I was in the right. Yeah,
good timing, man. Good timing.
Yeah. Well, it was probably better back in March, but. Yeah.
Well, you did 3 months after March, right? So okay. Yeah. Not bad. But overall, it just it just seems like things might be different this time. What do you think?
Yeah. Oh, and I was gonna say I'm Vulcan Trader, Brandon Frenchak. We did a podcast before just because we didn't say my name, who I am. But anyway, I've got a YouTube channel if you want to check it out.
Oh yeah, please be sure. Sorry, I would have mentioned it at the end for sure, and I do have it on the.
So they know who you're interviewing.
In the descriptions, yeah, for both the video on YouTube and for the podcast. So yeah, so what do you think
about this next market cycle?
Yeah, are we in a cycle, or is it just purely a cycle, or are we seeing so much new adoption, so many new institutional investors coming in, retail as well, being onboarded through the PayPal thing, through the Robin and all the other apps? Is it just different this time, or?
I think it most likely is. If you know who Dan Held is, he's he works for Kraken, I believe. But anyway, he has a art or YouTube video on the Bitcoin super cycle that I watched recently, and it's just talking about all that kind of stuff. It's kind of like, I don't know, maybe let's say 10% of people own Bitcoin this time. And once you reach somewhere between 30 to 50% of people own it, then you'll have a point when the price will hold up. And then, if we get enough companies putting Bitcoin on their balance sheet and your average person understanding it, owning it, using it as a savings account, and then if that stays that way, then the price should hold up. And also you can get loans against your Bitcoin this cycle so that you wouldn't have to sell it, and you can get interest on it. So if you have enough of it, you can get a loan, get interest, and never selling, you just live off of those things. And we can get more into that. I think it's an interesting concept. And then the miners could do that too. They could get either loans against their Bitcoin, or they could issue debt, issue shares, issue like MicroStrategy did. They did senior secured notes or something. Might not be getting that name right, but anyway, just different types of debt instruments that you can get with the traditional banking system, or if you're on Wall Street, publicly traded, things like that. And, you got Riot, Mara, they could be doing that instead of ever selling their Bitcoin. So your stock to flow model, your flow is all the Bitcoin that's being sold. So that'll be held up because they can just issue debt in order to pay for whatever they need for their expenses, and then all that will be everything is locked up. From an individual can get a loan, a company can obviously do that even more so than we can, and miners, et cetera, et cetera. So you got more long-term holders and the ability to continue to hold longer and not have to sell and all that kind of stuff. Pay long-term capital gains tax by doing that as well, and all these kind of things. If that makes sense.
I absolutely agree with all of that. And I also sort of like, just to put into a real simple analogy that people might be able to understand it from my views, I feel like back in 2017, it was sort of the wild west of crypto. We had all these ICOs occurring, and there wasn't a lot of clarity in terms of regulation. So a lot of institutions weren't coming into this space at the time because of concerns about regulation and things like that. And people were getting scammed with the BitConnects and with a lot of the ICOs that ended up being rug pulls where the development team would just disappear or whatever. And you fast forward to today, into this bull market, it's still kind of the wild west a little bit in crypto. Because especially when you look at things that are going like the liquidity pools and the yield farming and some of the rug pulls that are happening.
I don't know anything about this stuff. You know me, I just index. So
this last week there's been a number of rug pulls that have occurred, two of which were on the Binance Smart Chain, and so one was a smart contract problem. People could get access to the anyway, it ended up being the team in one instance, and so it wasn't. But anyway, where I'm going with that now is it's like, now Bitcoin's kind of the Wild West, but or crypto is kind of like the Wild West, but there's a sheriff in town. And so there's been a lot more clarity in terms of regulation. So we have these institutional investors coming in like crazy. We talk about MicroStrategy, we can talk about Tesla, we can talk about Grayscale, we can talk about the futures on the CME with both Bitcoin and Ethereum.
First North American ETF in Canada.
There you go. Yeah, first ETF, that's right. Also, we saw Jack Dorsey of Twitter. They created an offering, and they're raising money, which could be, so there's speculation. There's a rumor floating around that Twitter might be the next one to follow suit after Tesla. So just a completely different environment where things have really matured. There's a lot more regulatory clarity. Of course, that's also brought like KYC and AML all over the place on the exchanges and things like that, which people will feel differently about. But
and then in the United States, you got still even more of those Bitcoin trusts. So you have GBTC, which has been around for a while. The Osprey one started trading, which that trust holds Bitcoin. BlockFi is also coming out with one of those, and then there's another one, Valkyrie, that'll be coming out as well. And then and Bitwise already has one, and then Bitwise is coming out with a DeFi crypto trust that's all over the counter, not anyway, not an ETF, but all this stuff to hold all those coins, which will cause money to flow into them.
And so just this morning on the daily morning update that I do every morning, I do a news update, what's happening that day. And there were a bunch of stories that were talking about how institutions were buying this recent dip, right? When Bitcoin went up to 57,000 and then dropped back down, and Glassnode does chain analysis, and then their data is showing that the institutions were coming in and buying. And what was interesting, one piece of data was that the number of Bitcoin purchases over 100,000 during this last recent dip was greater than purchases from $10,000 to $100,000. So that tells you it's big and investors, the institutionals that are coming in and buying that Bitcoin. And so just another reason why this time around might be a little bit different than 2017. And just on a side note from that, I mean, I'm not a trader. I don't think you're a trader.
Well, no, I'm a trader.
Are you? You consider
Yeah,
yourself
I'm a
to be
trader, but I mean, half my Bitcoin holdings are long-term positions, and I do swing trading, kind of the other
Swing
half.
trade, not day
Yeah,
trade.
correct. Yeah.
Well, trying to time the market is something that very few people can do and do it successfully. And
Mm-hmm.
a lot of the guys that I have followed over the years that do technical analysis and that sort of thing, they pretty regularly are wrong, right? So
Mm-hmm.
just especially with such a new market, with it's so immature and there's just wild card type or things that can happen where you have crazy things with some celebrity comes out and mentions some coin and then it's going up 20-30% or what have you. But all of that kind of just to say, summarizing that and moving on to the next thing, it does feel like things are different this time around, and we might see that the growth in adoption and the growth of institutionals coming in and all these things might mean that I think if we make it through the month of March here without a significant decrease in sort of that historic crash, then we might go sideways for a while. And if that happens, I think that's hugely positive. And if we come into the end of next year, around Christmas time, during the holidays, we could just see another huge run up. And maybe it'll happen even before then. I mean, I don't know. I don't pretend to know what markets are going to do.
Mm-hmm.
But it does seem good.
Yeah, from a trading standpoint, we've been holding up above the 50-day moving average pretty much this entire run. And that's kind of like typical line where whenever like a growth stock, for example, is making a run, if you look at, I don't know, say Tesla or Zoom, Peloton this last year, that they'll be above that or they might hit it and they'll go maybe even slightly below it and then it'll come back up because that's where most of the institutions buy. So you kind of can see that same thing happening with Bitcoin, I think, whereas 2017 it sometimes would hit like the 100-day moving average and go a lot further down before it would run back up, and I think maybe just the institutions taking some of the volatility out of it or something like that.
Yeah,
maybe I'm wrong and we'll get some more bigger dips like that, but that's what's happening so far. So
and if we do, it's a good opportunity to buy, right?
Mm-hmm. Yep.
And to stack more. So obviously I think we talked about this last time you were on, but dollar cost averaging, DCA, can be just a good strategy for the average person who doesn't have time to really dig deep into trade and to, so just do that, right? You can't go wrong if you do that with Bitcoin every month, a certain amount over time.
I agree.
Right? And watch that grow and see the returns come. So anyway, all right. So moving on, I know you wanted to talk about a little bit some of these lending services that are available, like BlockFi, Celsius.
Yeah. Let's see. So it's kind of what I've been thinking about this a lot. It's like, okay, well, say we top out or whatever, or go sideways, like you're saying, after the end of this year. And so if you have gains and those gains are greater than $80,000 or whatever, then you're, if you bought, any Bitcoin, maybe you got a whole one or something before this last run, or even, put a bunch of money in. Even if you buy now, it might go up to 250,000, let's say. So if you're to sell, you're going to pay long-term capital gains. I think it's somewhere between 10, 15%, whatever. And then
if you've had it for more than a year.
Yeah.
Right. Yeah.
And then, and it's more if you've had it for less than a year. Right. Yeah, I guess if you bought it this year now, then you're going to be paying even more capital gains. Yeah. Which means that, well, you're going to have to buy it lower than whatever that price you sold it at by. Well, if it's 1 year, then 10 to 15%. If it's more than, it's short-term capital gains and 20, 30%, whatever. I'd have to look up the rate. So sorry, I don't know them off the top of my head, but you can, Google long-term capital gains rates. And so you'd have to buy it that much lower. And then if we're in a super cycle, like we're saying, maybe the price holds up, goes sideways, then maybe it doesn't even drop. Maybe it'll drop 50 to 80% like last go around. Maybe it doesn't. I'd say there's 50% chance or something. Maybe it doesn't because of all these things we're talking about. And it's a lot easier to just hold long term than trying to time the market. And so, okay, well, what do you do if you don't want to do that? Maybe you just want to hold long term and just keep either working your normal job, or you just want to make some. If you have enough, crypto or something else, then you want to make some money off of it, or maybe just a little side income, let's say, something like that. And but take advantage of some of it, but not sell the majority of your stack. So, like, what would be good ways to do that? So you can either, if you get a loan on your Bitcoin, let's say, or even let's say we'll do it like 5-10 years. Let's say 10 years from now, one Bitcoin's $10 million and you got one of them. Okay, you go and you stick. BlockFi is giving like 6% interest right now, and we can talk about whether or not you should do that. So there's the not your keys, not your coins, is how the saying goes, which is true. And so that you have it on, an exchange, you have it on BlockFi, anywhere, that could get stolen. And so you have to judge yourself, are you okay with losing any of it? And if you know that you only put 5%, 10%, you're still going to have 90, 95%, or even 15, 20, depending on what your risk tolerance is, the likelihood you think of them getting stolen. But taking that risk, then you can either get 6% interest on your Bitcoin, and if you had, I don't know, let's say one Bitcoin gets to 100,000, you're getting 6% interest. That's $6,000 a year. And then if it gets to $1 million in the next 5 years, that's 60 grand a year. That's enough to live off of, right? So, if you wouldn't want to put that whole amount on there, but, or say as it grows, then you're stacking more just by gaining that interest. Say you don't spend it because you still have a job, you can keep stacking that way, and then you don't have to sell it and pay the long-term capital gains. And then the other piece is, okay, well, say you need more money than that and you need it right now, so you can go take a loan on it. And how they do that, these is they're over collateralized loans, and it just means like, okay, say I had $100,000, I'm just using just because 100,000 is a round number or whatever, then, and you wanted to get a loan on that, so they would give you a loan for $35,000 based on your $100,000 worth of Bitcoin. So as long as Bitcoin, the value of your Bitcoin doesn't drop down to 35,000, then your loan won't get called. Yeah, if it gets down to the level, it'll get liquidated, so you could lose it. So you gotta, take that risk, understand that. But
do you know if they allow you to add collateral in that case?
Yeah, you can, and with Preston Pish, he's actually my second cousin or something, but he did a interview with the BlockFi CEO and all this, so someone wants to learn more the intricacies of how they do all this. But during the flash crash, they even did that, and they said they kind of put up or gave people time to send money, because technically they should have liquidated them. I mean, there's no guarantee of that, and their stuff's not insured. So, I mean, you should always say, okay, there's a chance I could lose this all. You shouldn't bank on that. But they did do things like that for their customers. And then you could always add collateral yourself once it got close to that loan to value level. But in a flash crash, like, what was it, March 12th or something, whatever it was, Bitcoin dropped almost 50% in a day, just about, or 40%. I don't think you would have time. Maybe you'd have time and get it there an hour, but I bet you so that would be kind of tough.
So then there's a couple advantages to doing this with Bitcoin or another one of the cryptos, is you are going to continue to have exposure to the price gain or loss of the end of that asset. So Bitcoin goes up, then you're winning.
You still own it.
But
then the short term, you can get some cash to pay the bills without having to sell your Bitcoin.
So why do it? And so that would be one reason.
And then you don't pay capital gains tax by not selling. And you can even write off the interest as a tax deduction, I believe, in most cases, and depending on your country.
Which that, I think, could be one of the biggest reasons to do this. I mean, that is huge.
All those things.
To keep that asset, to not have to pay capital gains when you sell something. But to do it with Bitcoin versus like a stable coin, because they provide better rates for stable coins. But then you would have the tax advantage of not having to pay capital gains, but you wouldn't have the advantage in that you're keeping that crypto.
Exactly.
Seeing the potential gains.
But this is basically what the rich do. And so if you want to, I want everyone, all the common people, I want that are good people to have all these kind of tools at their disposal. So this is what like Elon Musk did with his Tesla stock. He was taking loans on it to live off of, and he never sold his Tesla stock. And then as it finally skyrocketed and the price appreciated, it becomes very easy to service that loan, because the amount of money that he borrowed against it, it went up, I don't know, over 10x from whatever his original purchase price was. And so his loan made it seem like nothing. And then you can basically keep doing it. It's hard to wrap your mind around, but you can do that into perpetuity. You can, then once it goes up and then he needs cash again the next year, he takes out another loan and then he never sells. And if it keeps going up, then he can always just, the new loan pays the interest on the old loan, and you keep doing that. Basically, this is what the U.S. government does, actually. They constantly run a deficit. They spend more money than they earn, and then they get a new loan from the Federal Reserve every single year to pay off the old loan, and then the interest rates always go down because they artificially manipulate them down. But with the interest rates going down is the same equivalent of the price going up of whatever the asset you're holding. And so you can, as long as it over the long term, that thing it's going to go up, you could keep doing that for forever. and it would never end. It's kind of interesting concept, hard to wrap your mind around, but it's
Yeah,
cool to think about.
Similar to another idea along those lines, though, and I wouldn't recommend this because it could be extremely risky to over leverage yourself this way. But I suppose if you had $100,000 in Bitcoin, you could go put it into BlockFi. What's the collateralization percentage?
35%.
35%. Okay, so you could pull 35%.
Oh yeah, and then they charge you like, let's say, because I've done this. I got a loan against my Ethereum, so I've done it on both sides, and then I have a little bit of my Bitcoin in there, and I'm gaining interest on that. So I want to say they charged me, I don't know, 8-9% on my Ethereum for the loan. So let's say it's 8%, and then you're getting, I think on Ethereum they give you 5% for any Ethereum you'll have on there if you're not getting a loan on it. So basically they're getting part of the spread of whatever that, if you have your stuff in there with them, you get interest, and then for the loans they loan it out at a higher rate, and they capture the spread in between that, and that's how they make money. And but anyway, so
where I was going to go with this is I suppose you could send your Bitcoin to them, your $100,000 of Bitcoin, you could get that loan, go buy more Bitcoin, right? Put it back in, collateralize, and just kind of.
I wouldn't recommend
no,
that,
I wouldn't either.
but I've been doing that. I've been like, with like I'll take half, keep the cash, the other half I reinvest it, just because I think we're still at the beginning stage of the cycle. It's very risky. I wouldn't recommend that.
If your timing was right, you could.
And it's still only on a small portion of my stack. I'm doing that, but I'm just like, well, I feel like I'm gonna keep it in there. Maybe if I end up having to sell a little bit, if I decide to go that route, I should get a little bit of appreciation in the meantime, instead of holding full cash on that loan, if that makes sense. And I'm not recommending that to people, but I'm a little crazy.
And I suppose if you miss a payment on the loan, I suppose they then do they just take that payment amount from your collateral, or
I'm not sure about that, but
liquidate the whole thing?
So the payment is interest only, so it's a really small payment.
Okay.
So you pay just the interest for like 12 months, and then it's a balloon payment at the end of the 12 months, whereas you've got all that, like the Ethereum's just locked up in a contract that they have, and so they either would use that Ethereum to pay it off, and Ethereum's gone up since I did that, so whatever portion of it, and then you get to keep the portion of whatever the original amount that you wasn't that you took the loan against. Sorry, I didn't word that very well, but does that make sense?
Yeah. No. So what are some?
But then you could always just take it once that tech came due. You could take out another one and then do it again if you wanted.
Okay. So we've talked about BlockFi. What are some of the companies that are providing this? We got BlockFi.
Okay, so we got BlockFi, you got Celsius, you got Nexo is another one, and Unchained Capital. And they're good because they have multi-sig wallets, and you can basically, Dan Held talks about this, that's what he uses, and they have a higher interest rate. I want to say it's like 11%, but then the benefit you get is that you own one half of the private keys on the wallet your Bitcoin's in, so it keeps it from getting stolen, but then you pay, and they don't rehypothecate or relend it out or anything like that.
Right.
And so that for that higher rate, you get a little bit more safety basically on your Bitcoin that's locked up.
Perfect.
So it's kind of a choice that you have to make on those. And
so just in case we have people who don't understand that word rehypothecation, just explain a little bit what that is.
It just means that, you like I go and stick my Bitcoin on BlockFi. BlockFi can go and relend that out to somebody else, on a loan. Whereas if on Unchained Capital, if you go and stick your Bitcoin into them and then they give you a loan based on that, they're not going to go relend that Bitcoin to somebody else to make more interest, if that makes sense.
Yeah.
So
it's part of
it's basically fractional reserve lending for Bitcoin. So there's some risk there, like I said, and so that's why you want to do a very small portion and understand what you're getting into. And I would keep majority of your stack in your own wallets would be the recommendation.
When you start to understand some of that, it just boggles my mind that can happen with institutions that have been given the right basically to lend out more of an asset than they have. It's essentially just kind of this crazy thing. Rehypothecation.
It's really actually, they have a very high reserve level compared to normal banks, because normal banks were at 10% before the coronavirus crash, and then the Federal Reserve made it to where they're zero now. And basically all that happens is anytime there's a run, and then the Federal Reserve will give them infinite amount of money to cover that if that were to happen. So
that would be a really good transition
because the FDIC insured,
Yes, that'd be a good transition into another subject that we wanted to touch on, which is you've been reading or have read this book, The Bitcoin Standard, and this sort of just I'm guessing covers. I've not read it yet. It's similar, but the sort of global not the big picture of why Bitcoin and in relation to the Federal Reserve and all that. Is that correct? I mean, maybe you could just give us a little bit of an overview, or I know you want to talk some things about.
Yeah, so it's a really cool book. Because I've been, doing all sorts of reading on economics and history and money, and really all history is the history of money, and it's a kind of a neat thing to think about. If you look at all events, I think money is the underlying thing for everything and drives it. And
War.
Yeah, and so for one example of that would be war. So you look at World War I, World War II. When did they start? World War I was 1914. When did the Federal Reserve start? Federal Reserve started in 1913. And so I think we maybe talked about this on one our other discussion, but Bitcoin, people say, oh, Bitcoin fixes that for everything. It's kind of like a joke, but it does fix a lot of things. And so if governments couldn't print as much money as they wanted, then they can't fund wars for an infinite amount of time, or for a long period of time. They could only spend the money if they had to fund the war, and then the war would end. But whenever you have the creation of the Federal Reserve and all this extra money printing, then they can use that to steal from the people through inflation in order to fund the wars for longer. And so you have all those wars that happen after those points. But as far as the Bitcoin standard, so it's by Safdin Amos, if I'm saying it right. It's on Audible,
just to be sure and show to people.
Yeah, he's got a really good podcast too, if you want to listen to it. But I think it'd be a good book for your. It would. I mean, it's still a long book, but it would save you the time of reading all the other random books that I read in order to get an overview of the history of money and why Bitcoin is the best money, and give someone more conviction to hold their Bitcoin and all that kind of stuff. So, but he goes and start like just different things that have been used as money and throughout history. And I'm not going to touch on all the really weird ones, but there's some strange things at the beginning that are kind of interesting. But it's more the like during the gold standard eras, or that's the right one.
Right there. Safdin Amos. Yeah.
So, but like say 1700s, 1800s, if you look at the, the architecture or the, like the Victorian area architecture and all the old buildings or the old churches and things like that compared to stuff now. If you look at the Health and Human Services building for the government, it's just giant concrete block. It's super ugly. Or you just look at how all the founding fathers dress and how well spoken they were, and the men were more masculine, the women were more feminine, and I don't know, it just seemed life was better in a certain way. Not to say it was perfect or anything, of course, but and then all the great artists, happened during this type of time, like or great musicians, whether it's Beethoven, Bach, Mozart, Leonardo da Vinci, Donatello, Michelangelo, and then you got Isaac Newton, all these type of people. A lot of those, they were funded actually by rich I guess, what do you call it, philanthropists or entrepreneurs or something like that, as opposed to the government funding everything. When the government funds all that, you look at all the science and art we have now, and it's all government funded, and you look at modern art compared to the old art, and it just sucks. It's like, it's not even art at all, the whole banana taped on a wall, or just someone make it, just make some random boxes or some splotches, and then we call it art somehow. And it's just not, the level of skill and the time that's taken to do the Sistine Chapel or Michelangelo's David, or any of the great old compositions by some of those people like Bach and Beethoven that we talk about. And but anyway, Safdin talks about having, well, he calls it low time preference. I messaged him, or I tagged him on Twitter and said it should be high time preference. I think he made a miswording there, but either way, his point is that you should have, if you don't have this desire to spend your money instantly right away, then you're going to methodically plan and decide how you're going to use it for something that's really valuable in the real world. But if your money's constantly melting away the value of it, then you're trying to spend it as fast as possible. Absolutely. And then you get up with, end up creating everything that you create, from clothing, architecture, music, art, science, ends up being really subpar, crappy things. Look at, Beethoven, Bach compared to, I don't know, Katy Perry or Lady Gaga. It's just not really much comparison there, and we're still listening to those things hundreds and hundreds of years later. I highly doubt that'll be the case with their music in another 200 to 300 years, if that makes sense. So that's what I mean. All the money, underlying money of any system or any economy, it changes the culture and everything about it. And so he's saying that once we land on the Bitcoin standard, be even better than the gold standard, we'll start to see kind of a revival of all these, a renaissance of all these type of really awesome things in every area of life and every specialization, I guess.
Yeah, interesting.
So it's a really cool thing to think about, I think.
Yeah.
Hope it happens.
What
do you think about all that?
Well, I think that Bitcoin would be an improvement for sure over current monetary systems. Obviously, governments are going to go down kicking and screaming for that to happen, because the money in the monetary system is the greatest control mechanism ever devised, right? And so there's taxation issues. There's, in order for it to happen, it would probably have to happen through some kind of catastrophic event, I would guess, but who knows, and then is it best for there to be one standard, one currency that dominates and rules, will be another question that I have. So it's an interesting project called it's called Reserve, and what they're doing is they're creating what is essentially a stable coin that will initially be tied to the US dollar in terms of its stability. But then what they're going to do, it's different than so many of these others, is they are going to back it by crypto assets, whether it be Bitcoin or whatever. They're going to bring this basket of, and also other real world assets, commodities and things like that. So this is their theory. Now, whether they pull this off or not, who's to say? But the idea simply being that, these different assets, they will go up, they will go down. So if you have something in the real world that has value, like pork bellies or whatever it is, it goes up, another thing goes down. Well, if you have a currency that is balanced across all of those, it creates a stability in terms of purchasing power that you wouldn't otherwise have.
So you said, so a basket of all those things?
Yeah.
Okay.
So
I think the answer to that would be that's good, but it's not the best. And it's kind of like, what was it? The name's escaping me. But basically the world economic people, they were talking about creating a basket of all the fiat currencies for that. But if you added in, stocks, you added in real estate or whatever else, that'd be good, except for, so let's talk about the stock to flow. We should talk about that because that relates to all this. So stock to flow is, it's a model made by Plan B, and you can go check him out on Twitter or whatever and read his article on it. But it's just showing that for the scarcity of an asset like gold or silver, and then the stock is the above ground amount of gold, let's say, and then the flow is how much gold is mined every year and how much time it would take to mine enough gold in order to replace the above ground stock. So for gold, it's 60 years, I believe. But then if, say, the price of gold goes up, we talked about this before, then you could put more money into production of gold mining and then speed that up. Whereas Bitcoin is the only thing. You could create another cryptocurrency to do this, but as far as Bitcoin, it is the only thing that, the amount of reward that the miners get, it doesn't matter how much the price goes up, you can't get any more supply by adding more money to production, if that makes sense. So that it will always be the same and it's always be consistent. And then the stock to flow for Bitcoin is, I want to say it's 60 now, maybe it's equal with gold since the last halving. I should know that off the top of my head. I'm sorry I don't. But anyway, you can Google that, look it up. I'm pretty sure that's what it is. And then it'll get to where it's even better, at 120 after the next halving, let's say. So the harder money is, the more it has saleability across time, is what Safety talks about in the Bitcoin standard. So you need something that holds value over time, and there's three different ones. But I'll just leave it at that with the time. Okay. And so Bitcoin or any other scarce asset, I know you're a Cardano guy, Cardano is limited supply too. So same thing would apply if enough people adopted it, right? So it's just that it would be better than that basket of all the other things is the point. And so, as far as holding value, keeping that value as money, something you can use to buy anything else with, and it holds that value across time.
Yeah, that discussion could get super complicated and nuanced, and and some of it would have to be trial and error, I think, to actually learn whether it works well or it doesn't. One thing, for instance, to think about, if Bitcoin was the reserve currency, let's say, then you have a cryptocurrency, and it's one cryptocurrency that is dominating. It opens it up to more attack, right? So nation states, for instance, if they were to try to attack it with, creating and building and enough mining power or whatever, or controlling even the electric grid, since it's proof of work and you have to have electricity in order to mine it. There just are things that could be done. Whereas if you have a number of currencies that are limited in supply like that have the same qualities that Bitcoin essentially has. They're fungible, they're non-confiscatable, and all these other types of things. You spread the vector points for attack out, and I think that's actually a possibility.
I see what you're getting at.
Yeah.
Or in just like talking about where all of them have different use case, like Ethereum's use case is totally different than Bitcoin, and I'm supportive of all that. And
then they have to compete, not only technologically but for market share and that sort of thing.
Yeah, right? Exactly. Yeah, I totally agree with that. I was more talking about if you added like other currencies, real estate, port, all that kind of stuff, other cryptocurrencies. Yeah, I'm all for it. Yeah. And I'm just saying, and if as far as a holding value standpoint, that whatever has absolute scarcity is the thing that would be best for that, compared to a basket of things that
relative to everything else.
The bottom portion maybe is less scarce, and the top portion is more scarce. If that makes sense.
Yeah, and in theory, relative to everything else, it'll actually increase in value rather than just hold value, right? Purchasing power.
Oh yeah.
So I mean, that's obviously the way that it's been with Bitcoin. If you put whatever amount you put in, if you put in $5,000 3 years ago, the purchasing power of your Bitcoin it's not just, it hasn't just maintained purchasing power in terms of relative to the US dollar. It's significantly increased. Right?
Yeah, and that's because they keep printing money. If one day fiat currencies weren't accepted anymore, and then that was the money. Let's say, I'm not saying this will happen, but just in theory, if the Lightning Network worked perfectly and we could use it for, and everyone hated fiat currency so much everywhere around the world, which made this, maybe 20, 30 years out, maybe, I don't know, but maybe it won't happen. Maybe they always stay around. But anyway, if you had that, then oh gosh, where is it?
Well, the increase in purchasing power would
it would be more of a flat purchasing power, but you wouldn't lose purchasing power.
You'd never lose. Actually, I think because it is deflationary, you would always gain, and the reason why is as economies expand and as the number of users and people that enter into this scene that need money and they're working and creating value through that, and you would actually, in theory, continue to see your purchasing power of that asset expand as well and rise. I think is the way that would work. Maybe not as exponentially or as quickly as it has been.
For sure. Yeah, agreed.
In the past,
you had asked a question about BlockFi and the stable coins and interest on them as opposed to having Bitcoin earlier. I was just kind of
throwing that out as you can earn more interest, but you don't
get the upside appreciation. Exactly. Gotcha. Yeah, you could do that too. You could, if you had some, you wanted to keep a portion of money in cash, you could put it in Tether, Gemini dollars, and you get like 8-9% on those on BlockFi and other services like that. So, once again, I'm not recommending that everyone has to do their own due diligence, whether that's smart, but in theory you could.
But it also won't get liquidated, right? Because it's
that's
stable,
true.
So
that's true.
It's just basically like a loan.
Yeah. But anyway, I just wanted to hit back on that because we missed it, didn't hit it totally. But and then as far as and then the other piece you got is that during those centuries when you had more of a gold standard, I don't know if there's ever a total gold standard, but you had more of a gold standard, and he talks about how that it was also one of the periods of the least amount of government control, which in my mind that's a good thing. I'm not an anarchist, where I don't think we should have government at all. I think we should have government for limited things. Don't steal, don't kill, stuff like that. But the level of control they put now is just. I was so pissed off yesterday. I'll tell you a story just to demonstrate this. So we have a family member going through some issues, and anyway, they needed to get their teeth worked on, and they have expired IDs. Long story how I got to that point, but anyway, so they got some expired ID. They got a passport, they got a driver's license, but they're expired. Okay, and then their teeth, they're like hurting really bad. They needed to get service. We go to the dentist, and I'm actually friends with the people at the dentist office, and they're really good people. And so we had an appointment. Took them to get seen, and was going to help pay for it. Then they basically told us they couldn't give a service because it would be a HIPAA violation, because they have to create a patient record, and that patient record has to be based on some form of identification, and it can't be expired. I'm thinking, well, it's not like it becomes counterfeit the day the ID expires. It's obviously still the same person. But they said that, but regardless, the same thing if you went to a bar or whatever. And I mean, they were right in their argument. I can't blame them, but they could get fined like $50,000 if they came and their medical records came in to get audited. Okay, so they can't help someone that was, in dire need. Because they're good people. They really would want to help because of the risk that they would have to take on to do that. And it's all because the government decided to regulate it even more than they were already. Yeah. Okay, then. So they're like, well, just, if you get an ID, we really, we'd love to, be there for you, whatever. And the same thing applies. We went to any other dentist office. So I was like, okay, well, let's go to the DPS office. So I go to the DPS office to go get an ID or get an updated ID. And they wouldn't let us in because of coronavirus, or, well, not because of coronavirus, but they were letting less people in because of that. But they, all the spots were filled up, and they're like, oh, you have to, register for an appointment online. I'd gone to the same one maybe, I don't know, sometime a year ago, and it maybe took an hour to 4 hours, let's say, to make an appointment, and then they text you whenever you could go in. So I go to make an appointment, and you couldn't get in for a month. And that wasn't just that location. Then I checked all the other locations in the Houston area. They were all a month out. So the government keeps you from getting any sort of medical care because they regulate that. Then they do all this corona crap and try and control us that way. Whether or not you believe in that, I don't think they should be able to control us in that way. Is my personal opinion.
I call it COVID-19 now.
I think we should have the freedom to take a risk with whether or not it's dangerous or not. But you should have the freedom to take a risk with your own life if you want to. And I don't know, I believe in Jesus, and if I die, I got Jesus. So anyway, that's my position on it. So. That all being said, that's a catch-22. Can't even go, get some dental work done for someone that really needs it because, both sides of those things are keeping that from happening. It's just crazy, and that's what you get when you have a fiat system where the government can constantly print more and more money and gain more and more control over every industry and part of the country. So I'm more for.
So your story basically illustrates it's not about identification verification. Yeah. It's about making sure that you continue to go in and keep your your government ID up and your driver's.
That's not even that. It's just the government is, when it gets so big, it's just inefficient and screws things up and makes it worse than improving it and being benefit. It should be to serve the people, not to control and keep the people down. And they should provide some service that makes our lives better, not worse.
It reminds me of the time that I had to drive my vehicle without insurance in order to register it or whatever, in order to get the registration. You have to have, it's like, I remember I forget the details now, but it was a similar story where it was like, this makes no sense. I said to the person at the DMV, you're telling me to go engage in illegal activity in order to comply with, she's like, yeah, that's what you have to do. I remember another similar situation was like, if you have a vehicle and you need to pass emissions and you've got the check engine light on, you can't get it to reset unless you drive it 200 miles, or you can't pass the emissions test unless you drive it 200 miles. So you have to, anyway, it's just like, this happens a lot all over the place. I'm sure, where, the right hand doesn't know what the left hand is doing. Yep. It's just the inefficiencies of bureaucracies.
But the point is, when the government doesn't have control of the money supply, then they're limited in power and in scope, but they would still exist. And then, because I don't think that unbridled capitalism is a solution either. If you go look at like the robber barons and that whole era back then, you'll get infinite size growing companies and monopolies that do pretty much the same thing. You got to kind of have checks and balances either direction is kind of how I think about it.
Yeah. Well, and I absolutely agree with you. People get really worked up about politics sometimes, and they are not realizing that it's a smokescreen, really. The Republican thing, the Democrat thing, this and that. But in reality, they're all doing the same thing, and that is spending, increasing programs, taxing, all of this, but all of that is enabled. It all goes back to the monetary system. This can be done because there's no restraint on what they do, because they can just print and create more money, right? Yep. Whereas if there was that restraint of it being real money that was backed by something, then they wouldn't be able to do these things. Yep. It would limit their powers in a lot of ways. Anyway, I mean, it's just another reason why they will, fight to the death to maintain that grip over everything, right?
Yep.
So it seems like lately, you cannot, like every day when I get into the news about cryptocurrency, Michael Saylor and MicroStrategy
Okay, yeah, perfect. That was
comes
good
up every single day. This guy is like, he's basically attacking the dollar by. Anyway, you talk about
Yeah.
it.
Okay. Yeah. Yeah. No. I mean, he's attacking the dog, but he's not big enough to really affect it that much. But people act like that. It's kind of neat. But it. Yeah, but he's basically just been issuing more debt at like these really low rates for bonds first coming because the institutional bond investors they can't get exposure to Bitcoin, and so they'll buy. The first round he got was a bill. I think I talked about this in our last podcast. First round was each time he tried to do like maybe 600, 700 million, and it got oversubscribed, and he ended up issuing 1 million in bonds at like 1% interest the first go around, and then this recent one it was 0% interest, which makes no sense. But I mean, I guess when you got the central banks in Europe doing negative interest rates, maybe it does, right? But if MicroStrategy is going to use that $1 billion to buy more Bitcoin on their balance sheet, but then the institutions that buy those bonds can get the upside appreciation of MicroStrategy stock because it's convertible to their stock if it goes above a certain number. So anyway, he's just constantly loading up on more Bitcoin. And there's a guy during the Weimar Republic in Germany they're equating him to. I forget, but he was called the Debt King. I can't think of his name, but he basically did the same thing, just kept issuing more debt. And like I talked about before, if debt in a an highly inflationary currency is a good thing, and so like I have the mindset of like, well, if I don't want to pay off my house because my house is priced in U.S. dollars, and so the longer I hold that in inflation, then it'll be easier to pay off and cheaper, and so that's a good thing. So he's got the same mindset. So you issue debt, and so you owe money. You're basically short the dollar. Is that right? I think if the value of it goes down, and then you're long some other really awesome asset that will go up is what you're doing. So you're getting kind of double whammy there and accelerating time by issuing debt, and instead of having to just make the money that you're going to use to buy it, if that makes sense. And
that's interesting.
So, but that'll be just to kind of give you back. But he's just got a normal, profitable business intelligence company, but then he's doing all this extra stuff to kind of accumulate more Bitcoin. But he's kind of become like they call him Captain Sailor. A lot of people do, and but I think it's appropriate. He's a super smart guy, and I listened to my cousin Preston's podcast with him, and it's called the Economics Masterclass. It's so interesting. It's 2 hours long, but I mean, it didn't feel like that when I was listening to it, and we'll get to that in a second. But then he also did one with, and he did one with safety too. But he's talking about inflation and what is inflation, and I think it's the proper way to think about it. You're talking about the CPI index and how it's aligned with the true price of inflation is, and so you can mention that whenever you want. But he was saying, well, if you want to buy let's say you want to buy a house. Okay, if you wanted to buy a house 5-10 years ago, that house probably doubled in value from now because the CPI only includes like, I don't know, your typical things like I don't know, maybe gas and food and things like, I don't know, televisions. I'm not sure what, I don't know it really well, so I could be wrong on that. But anyway, it's not, it almost, it's changed over the years and basically doesn't include anything. It goes up in value.
Right.
And let's get to the deflation piece. So Jeff Booth has a book called Deflation, and he talks about in an inflationary system, you basically get a lot of automation because the companies that can automate, and you basically take out people, and the price of things like they're saying America, the price where everything that you need is expensive and everything where you don't need keeps getting cheaper. So televisions, video game systems, cell phones, well, mainly Androids, not iPhones, but cameras, whatever, things like that, or your bunk beds, your couches. I'm just looking at items around the room, but those have stayed roughly the same, or even maybe gotten a little bit cheaper over time because of automation and economies of scale and whatnot as technology's increased. But then things you really need like healthcare, housing, or college, whatever, those go up in value as time goes on. And stocks too, those stocks aren't a necessity. But so it's just funny how inflationary environment causes deflation on certain things, but then inflation on other really important things. So anyway, Saylor's talking about how the true price of inflation is probably one point it was bonds, maybe the 80s you could get 81, maybe you could get 18% interest on a 30-year, I think. And then as time went on, that went down. Now we got, 1 or 0% interest on, sorry, I'm turn my phone off here. On depending on what kind of bond you're buying, which is essentially nothing compared to the amount of money they're printing. And so eventually you had people buying stock index funds like the S&P 500, and that kind of became your de facto hedge against inflation, because as the prices of things go up a little bit or there's more money printed, the rich people that are at the top of that money printing, was called the oh gosh, can't think of it. Anyway, there's a name for it. Whenever they print the money, the people at the very top of the pyramid that get it first end up having more purchasing power. I should know it, but anyway, so they're gonna like stocks, they're gonna buy real estate, and then the price of those things go up, and then like we're talking about tech companies do all the automation. They end up taking from the companies that aren't tech savvy and don't automate, don't use technology to their advantage. And so he's saying more in recent years have become the NASDAQ, which is the top 100 like tech stocks, basically. All your FANG stock, Facebook, Apple, Amazon, Microsoft, Google, Nvidia, Netflix, all those ones kind of get all your inflation. And you get maybe 15-20% is your true rate of inflation whenever they print money, because those big massive companies pick up all that money printing. And so that's your true rate. So he's saying that, well, the I guess the road to serfdom is working harder for a currency that's rapidly depreciating and in more hours. And so if you're your average person, if you're working a job, if you're holding cash, then you're losing 15-20% of whatever you made per year if you're trying to save or whatever, unless you just invest properly in growth stocks or tech stocks, and you kind of keep that purchasing power. But then Bitcoin, if you save in Bitcoin, then you get the opposite effect of that it's going to appreciate. Bitcoin's in 200% per average. I mean, every year, I think, if you over maybe last 10 years, something like that. But it might go down some, let's say 50-100%, but that's still way better than those companies. And any company that does that, same thing applies. If you own a company that's earning and converting to Bitcoin, like MicroStrategy, compared to maybe a growth company, let's say that company is growing really fast at sales, but then their cash is depreciating at 15-20% per year, whatever they're making, then they're not going to perform as well. And so as that changes, then because Bitcoin's not a productive asset, maybe some point way in the future when Bitcoin's worth 10 million or 100 million, somewhere between there, maybe it would make more sense to own a productive asset like a company, but that's earning in Bitcoin. But until we reach that point, we're if all that makes sense, hopefully. But anyway, Michael talks about all that, teaches all these even more in depth than what I'm saying. I'm trying to give a general overview, but it's kind of mind blowing. You think about, I think it's the proper way to think about economics, everything that's going on right now, and the proper way to think about inflation, et cetera, et cetera. So all that makes sense. And
he's definitely one of the most articulated voices out there right now when speaking about those subjects. And he's putting his money where his mouth is and really leveraging. So it's interesting. So you also had mentioned along those lines another book by Jeff Booth. Yeah, so that's the deflation book that I was talking about. And the book's about how, certain things get deflation with the technology. And he was saying that deflation is the key to a brighter future. And so Bitcoin's a deflationary currency, or at least a flat currency, I guess you could say it. And that back in, I want to say early 1900s, they used to say that, eventually technology advanced so much that people only have to work maybe 10-20 hours a week if they wanted, because we won't have to work that hard, because everything that we need will be done so well and so efficient and so optimized that you just need to work a little bit to get the things we need, and they'd be pretty cheap. And you've seen, like I said, you've seen that in some things, but in the most important things, you don't see that. And even food is really going up now. You're starting to see, especially with all the stimulus. So he's saying that, if we would have had hard money, then that would have happened, and deflation is what causes that. But basically what happened is, as we got all that technological advancement, the government stole all that technological advancement for themselves by printing more money and devaluing the currency and stealing that from people. So they had to continue to work harder, and people are working harder now than they ever have. I mean, if you look back in the probably the 50s to the 70s, you're a factory worker
made the equivalent of like 60 to 80 grand a year. There's, out of high school, that like your boomers that out of high school, there's that, talking about the millennials need to work harder. I love the boomers, but I'm just giving them a hard time here. But, they could raise a family, the mom could stay home and, just without even having a college degree. And now it's just getting to where, bachelor's isn't even good enough. You got to have a master's, or you got to start your own business, be really ingenuitive. And then maybe both people have to work, the mom and the dad have to work, unless you are, really successful in some way. And so it's, they've picked up the slack for that. And, the American people are picking up the slack for that, working even harder than they ever have. And the family suffers because of it. And so if you have a deflationary currency, it takes all that back and, helps the family and helps society and all these other, all the other things we already talked about. So
sure.
Does that make sense?
Absolutely. It's good stuff.
Yeah. You liking that? You're just soaking it in or what?
Yeah. I'm going to shift gears a little bit,
sure,
though.
Go for it.
I have something I have to divulge to you, and I hope it's not going to upset you.
Okay.
But
nah, it wouldn't upset me.
I have tokenized your hair as
Okay.
an NFT.
Okay. I love it.
If it hits $100,000, I'm going to sell it on the Bondly NFT market.
Okay.
Maybe OpenSea or whatever. If it hits $100,000, you're going to have to shave your hair off and send it in to whoever purchases the NFT.
No. That'd be terrible.
I'm going to split the cost. I'm going to split that with you, though.
Okay.
So, I mean, $50,000, it's worth it, isn't it?
Yeah, it'd be worth it. I'd shave my head for that. Shoot.
No, but I'm just messing. But
I'll shave my head right here for $5,000 if you want.
That was my transition. That was my transition into what do you think about it? Because obviously everybody's talking about NFTs. Mark Cuban has been talking about NFTs. He
Jack
thinks it's
Dorsey,
gonna be huge.
I think.
Right? Yeah. And I have thoughts about it, but I thought I'd ask you first. What do you?
Yeah, I'll let you explain it because I don't know if I fully understand it. From my understanding, it's basically a non-fungible token, which is just a token that there's only one version of it, no other version, and that's tied to the value of something, whether it seems to mainly be done with either graphics or music, so, some sort of digital product.
Yeah.
And so I don't understand how that gives you ownership. In my mind, it's sort of a scam or not, and it can't be applied to products that aren't digital. If you can apply it to digital products, maybe, but even like a music or or art or whatever that's digital, it doesn't actually give you ownership of the actual thing, if that makes sense, by owning it. And especially because there's not really an authority on it, because that thing can still be copied and spread around, so you don't really get the benefit of owning it like if you had a record label in order to put it out or whatever, something along those lines, even though you can still steal it that way. But you get kind of what I'm saying. Yeah. And so that's why I think it's kind of overhyped, and it's hard to tie the NFT to the actual thing that the NFT is supposed to represent ownership in. Yeah. And why I don't believe them. It's a big deal. So you tell me why I'm wrong.
Well, I think there are some things that could happen within that space that could be big. So, for instance, within the music industry, we're an artist, and some are doing this already, releases an album or releases songs that are connected to an NFT, and you purchase that, and software can be written so that you can't have access to that digital asset unless you have the NFT, right? It's cryptographically
That's true.
tied to that. So it could be good for ebooks. It could be good for, and like you said, some of the biggest NFTs right now are just, all they really are is a record in a database, but they do have some sort of graphical representation that goes with it. One thing that was interesting was recently someone took a picture, burned the picture, tied it to an NFT, and sold the NFT for $1 million, I guess, with the picture.
Yeah, it's a crazy speculative market. Right.
Absolutely. Yeah, it is. But there are some other things that are being done. So there's Dapper Labs was the creator of CryptoKitties, which I always thought was kind of ridiculous, but people got into it. So within the gaming world, there's some value there. People will spend insane amounts of money, even in the legacy systems right now. Maybe they will purchase guns and land and property and things like that. So Atari, just in the news today, Atari
guns and land and property in the video game world.
Yes.
Okay, not real. Okay.
Yeah. So one of the best examples would be Decentraland, which has a token called Mana, and they just partnered with Atari, and Atari's going to be creating a casino within Decentraland, where people are going to be able to bet, and they're going to be able to and all of this is being powered through NFTs, and so I mean it's a little bit hard to latch onto, I think, and to grab, but a lot of it's in a digital world, but a lot of people live in that world nowadays, especially within the gaming world, and I don't know. Who knows? I
What
don't know
about
exactly
for the
where it's
gaming
going.
world? Why can't you just buy and sell that thing? Why do you need an NFT that's tied to it?
Well, you could buy and sell it on some sort of other market, but if it has an NFT tied to it, it's unique and it's one of a kind, right? And so some of the platforms like Decentraland or whatever, they actually have a plot of land. So it's the Earth. It's you go into the game and you zoom in down and onto the globe, and you can buy a section of land, and that's tied to an NFT. So within that platform,
And that section of land unique or something like that. But I mean, the
it's New
land
York
itself
or
makes
whatever
it
it is.
unique, so you
Yeah.
could.
Yeah.
So the NFTs are more just like having title to the land, kind of like
It
you
could
would
be
in the
it
real
can be
world.
that. That's one example.
Okay.
And then people can build up that land by putting buildings and things like that on it, which are also NFTs. And so just
Okay,
yeah,
let's go to
it's a lot of
let's go to art then. So you made a picture, and that let's say it's a good picture that's I don't know by some famous artist or whatever, and they make an NFT. So how does but it's it's a digital piece of art. How does the NFT give you ownership of that? I mean, anyone that has Google Images can just search it and copy it. Why does it make it more valuable for you to have the NFT? Does that make sense?
yeah. I hear what you're saying. I mean that is true. Like someone could have a copy of it or whatever, but they don't have the record on the database. And it's not that much unlike Bitcoin, which really is just a record in a database that says you have this Bitcoin, and there's only so it's just a supply.
But you can
demand
create
thing.
infinite copies of the art piece.
Yeah, but you can't the NFT, and so that's where the value comes in. It becomes a limited resource. So if you're a baseball
But the
company,
NFT itself has no value unless it confers ownership of the thing that you're wanting it to.
but you could say the same with Bitcoin,
How so?
right? I mean, it has no value unless someone wants to buy it from you, and all they're buying from you is a record in a database.
That's true, but the thing that I own and the thing that I say has value can't be replicated. Whereas with the NFT, the one can't be replicated, and then the one that has value can't be replicated
Yeah,
infinitely.
so you're actually just buying the NFT is what you're actually buying.
That's what I'm saying. Yeah.
Yeah. Although if it is on a platform that is controlled, or if it's on a chain, blockchain, for instance, right? So some of the things that get created. So if you look at CryptoKitties, for instance, they're programmatically created through the code, and they are one of a kind. They can't be reduplicated. Now, could you take a screen capture of it, or
I guess if that thing is
could.
something that you can only use in the game, then that makes sense. But
Yeah.
it seems like I don't know if it applies even to digital art, and then physical, same thing. I heard people saying, oh, the Mona Lisa, what's the different than owning the Mona Lisa, or you can have a copy of it, and it's like, well, that's the real thing, whereas the other one is a copy, so it's a little different. Whereas the one is a token of
But you make a good point. In order for it to work with real world property, you would have to have a legal structure. But it can go that way. If we had the legal structure that said, okay, this NFT attributes legal ownership of this physical thing, then you could claim ownership with it, and so it could sort of become a title type of system for. So.
But then the other piece is that you don't have that doesn't work unless you have some sort of authority to to enforce that ownership or whatever. Same thing with land.
So another way that it's happening. So I was going with the Dapper Labs thing that created CryptoKitties. Now they have these things. I think it's called Top Shots, where what they've done is they working with the NBA, they purchased rights to moments, they're called, and so they're short video clips of a moment within a basketball game, and then they sell that as an NFT, and so people can buy that moment, and no one else can buy that moment, at least not from Top Shots, right? Now you could argue somebody could go find the video somewhere else. Okay.
No, but if you play the video, you can just record it, and then you have
sure.
So that's kind of what my.
But you can't just sell the recording because there's a marketplace, and so you see what I'm saying?
Kind of like sell the recording.
Well, you could, but I mean, it's not going to have the same value as within the marketplace with that backing by the blockchain, right? So it's just creating marketplaces.
Why wouldn't it have the same value if it's the same?
Because
video?
It can't be resold. Because so I mean, essentially, in theory, you could sell it, but it doesn't have the NFT aspect of it. So
but you couldn't resell it, but you don't have ownership of it in the first place. If anyone can use it, why would it? I would say just a fool would buy something that you could get for free.
In that case, that's copyrighted material. So if you were to try to resell it, you would be infringing upon copyright laws.
Okay.
So and that's another thing with now there is actually laws in place, and when we think this through,
so you're saying that copyright laws could enforce NFT ownership or something?
If I create a piece of art, it is copyrighted. If I write a book, an ebook, it is copyrighted. Now, if I use an NFT system to verify, the ownership of that.
So you
sort
that
of
you could
thing.
use it to verify that it was the original and hadn't been changed or altered,
Exactly.
whereas like video
Yeah.
it could have tiny bit of
Yeah.
changes or how it got compressed once it was, someone stripped it from some other site, and whereas you would know if it was the original one or not. And then
Exactly.
you would have the copyright system that we have now to enforce it or something.
Yeah, it's even technically
Okay.
possible to
I could see that.
create you could not allow that ebook or that video or that audio is even playable or can be opened unless the attached NFT is along with it, sort of thing, and with through the encryption.
It's the same digital licensing kind of that you have now, but just a
Yeah.
way to transfer the ownership of this original and make sure that it's the original.
Yeah. So I need to learn and understand more about it too, from the technical aspect, to answer some of those questions. But I know enough to say, at least for now, I'm not certain that it's a scam or that it's not going to be something big. It really could, and then really at the end of the day, it doesn't matter. People spend stupid amounts of money on really stupid things. So we're going to see that, and there's going to be, and it's going to attract people to the space that maybe it wouldn't before, which I also think is a good thing, especially within the gaming world as that moves forward. So yeah. I don't know. It's fascinating.
Oh, yeah.
All right. Well, let's wrap this up with a discussion on Cardano versus Ethereum. Obviously, we're seeing this platform wars. If you look at the top 10 coins on CoinMarketCap, actually, let me just pull that up real quickly so that everybody can see what I'm pulling up here. Within the top 10, we've got Ethereum, we've got Binance Smart Chain, we've got Cardano, we've got Polkadot. And Chainlink is not, it's an oracle, not really a platform. But so 4 out of the top 5, and if we pull in the top 12, number 12, Stellar, 5 of the top 10 coins are these smart contract, decentralized app platform projects. So clearly they have a lot of value, because other than that, you pretty much have what are more of, did I count Ethereum? Oh, okay, yeah, 5 or 6, whatever it is. The other coins are more like Bitcoin clones, right? Except for XRP, or there are other tokens on top of the DeFi.
Which one's
Litecoin, Bitcoin Cash,
okay. Yeah.
And then the others are stable coins. The Dogecoin. You go all the way into the number 14, and all you've got is stable coins, platform coins, or basically the
platform
Bitcoin
coins like Binance.
Yeah. Okay. Platform. I'm talking about smart contract, the DeFi thing going on.
Okay.
So that would be Ethereum, Binance, Cardano, Polkadot. But right now the leaders are the top 4 coins. Let's take the top 4 coins. You've got Bitcoin, and you got Ethereum, Binance, and Cardano. So these are where the value is being found, and they're capturing value for sure. But we could talk about Binance Smart Coin, but we were going to talk about Ethereum and Cardano, I think, is where we want to go with that. So.
Unless you wanted to talk about whether it's smarter to invest in altcoins over the long term. That was our argument before. But stick with what Ethereum and Cardano. So
we could do that if we have. If we want to get into the other thing later on, we can. But what are your thoughts about Cardano versus Ethereum currently?
From what I understand, they're basically the same thing, other than a couple of things, but they're really important things. And so, the Ethereum, it's kind of the leader as far as anything besides a good monetary solution like Bitcoin is. It's got the smart contracts, got the NFTs, got DeFi, other coins built on top of it. There's probably some other things I'm forgetting, but anyway, it does all these extra things. But then the problem with Ethereum is that, it was good for a while until their base layer got bogged down so much, and that gets into the whole thing of a decentralized versus a centralized database. And if you want to look up and get really nerdy on this, you can look into cap theorem. But basically, there's 3 properties of any decentralized database that you can only have 2 properties out of 3 that you can have. And I don't even know if I could explain it well, but it's probably best to go look it up. But essentially, whenever a database is decentralized, the best way to explain it is that there's multiple nodes that it has to go across all the data as it hits to that database. And so you get it to the first node, and then it has to go to, that time. If there's 10 nodes versus 100 or 100,000, it takes longer to propagate across all those nodes. So that's a decentralized database. Whereas a centralized database, you just have one single really fast processing computer, like a SQL database is what I work with. But there's only one point. As soon as it hits that, it's done. And so it's actually faster to have a centralized database than a decentralized database. But then decentralized, has all the the benefits of not being able to be controlled by any one entity. And so that's why the kind of the point of blockchain and all that, having an automated, decentralized database instead of using banks or trusted third parties that are centralized, right? So anyway, so Ethereum has all that, but then anytime, and same thing with the Bitcoin base layer, it's you get to a point where you get so many transactions in that base layer, and then it reaches kind of the limits of a decentralized database, and you have to up the fees get upped for whoever the nodes are, the miners that are processing those transactions, and people have to pay higher fees to decide which transactions are going to get priority and go through. Does that make sense?
Yep.
And so that eventually happens as any coin or any blockchain decentralized database gets bigger. And so Ethereum's kind of hit that point, and Bitcoin actually is, even though the fees can be higher, they can be anywhere from like, seems $1 to, I've seen, $25 to $30, $40 I've seen sometimes whenever the network's really high.
Right.
But Ethereum, because it has all these other projects and other things, the DeFi, it's got tons of other altcoins that are built on top of it. And where Bitcoiners are hodlers, mainly, so that they're not always buying and selling, so you have less transactions, even though the market cap of Bitcoin's bigger. But Ethereum, you have all these other things that are by necessity have to always be transacting. Does that make sense?
Mm-hmm.
And so that you've had to have fees, which is the Ethereum gas, right? And so there's gas, just word for the fees. You have to pay a portion of Ethereum for. You have to pay for your stuff to go on the Ethereum network, whether it's Uniswap on the DeFi exchanges, anything built on top of Ethereum, this affects it.
Right.
So, but then the solution to that is or they think it's a solution. We haven't really seen a truly scalable second layer solution, but you create a second layer. That second layer handles the transactions that aren't as important or smaller transactions, and then you aggregate them. So you had 100,000 transactions, and the net total of all those transactions was, I don't know, $1 million. You just make one settlement of $1 million, one transaction to the base layer, and so that reduces the total number of transactions, which reduces the bottlenecks and the fees of the decentralized layer.
Right.
If that makes sense. And so you'd have to have a good second layer that is secure and isn't going to get compromised. And then I guess that one can't be a blockchain though, also, because if it's a blockchain the same way, it's going to run into the same bottlenecks. So that's kind of the issue with those. They're sort of centralized to a certain degree ish, but so that all being said, so Ethereum 2.0 hasn't happened yet. That's the new thing they're going. You can stake your so Ethereum 1.0 is the base blockchain layer. 2.0 is the second layer. You can stake your Ethereum, and then that you get interest, and then eventually they're going to turn on this second layer, and it's supposed to work and make Ethereum scalable.
Sharding.
Yeah. Make it scalable to, and handle lots of transactions. Whether or not that'll happen, I don't know. But so then Cardano on the left. So those are the two things. So Ethereum has that, and they didn't really plan out the second layer ahead of time or properly. And then Ethereum's also inflationary. They just have an inflation rate of like 5%. I want to say it is. I could be wrong, but so anyway, and which I don't think that's a good thing, right? Whereas so Cardano kind of has both of those things fixed in theory, and so it could be, but Cardano basically had the base layer and the second layer, and they made it all in the same language, designed it properly ahead of time instead of trying to transition right in the middle and flip it from and then Ethereum was proof of work originally, and they're switching to proof of stake, which you'll have to expound more on that, because my understanding of proof of stake is not totally complete, I don't think. But anyway, so Cardano is proof of stake. It has a good base layer. It's got the second layer, and then they made them all in the same language and planned it out ahead of time properly, so it should scale better and work together better, and they're not trying to change it right in the middle of it, is my understanding. And Cardano's not inflationary, so we don't think inflation's a good thing, or at least I don't, and we've already explained that, I think, in depth. So Cardano in theory has pretty much everything you could possibly want if it will work. So I think I understand your love for Cardano. Maybe you can go from there, and that's my why. And so I could see Cardano flipping Ethereum maybe one day if Ethereum doesn't get their Ethereum 2.0 off the ground and doesn't work after a while.
There's some other, just to touch on the Cardano versus Ethereum thing real quickly, and then I want to, AlphaZero actually has some data on the actual transactions per second for the various chains and how long it takes for the transactions to settle. So I want to look at that real quickly. But a couple things about Cardano is the governance system is huge in my view. they've got this Catalyst system, and you can download the Catalyst app on your phone, and connect it to your Daedalus wallet that you're using for Cardano, and you can be involved in the governance, and it's weighted based on how many tokens you have, which is great, because one of the big problems that Ethereum has had, and Bitcoin as well, is how do we make the changes that need to be made, right? So those then lead to contentious splits often. We've had that with Bitcoin, where we had Bitcoin Cash and Bitcoin SV and others, and Ethereum, this happened with Ethereum Classic, and so it's this long, difficult process, a lot of fighting and those sorts of things, whereas, Polkadot has fixed this, Cardano's fixed this with the Catalyst system. So that's one aspect of it. What was also cool about that.
This kind of something we talked about when we first met is that there's kind of three sort of different things of decentralization. There's decentralization of the nodes or the miners, which is how the transactions happen, or the database. And then there's decentralization of the money, how it's distributed, which is more or less important. I mean, because you're obviously going to have more people have more money, might buy more at the beginning, whatever.
Yeah, you don't want to have, in other words, you don't want to have the founders owning 70%.
Yeah,
or you don't want to have some huge whales that can dump and destroy the
exactly.
whole thing.
So you got that distribution, and then the last piece of decentralization is decentralization of the controllers of the code.
Right.
Yeah, and so that's what you're, and that might be the only one that has that I know. I don't know.
If some other entity comes, if one entity can change the code and thereby change the chain moving forward, then you really don't have a decentralized system. So so Cardano has that. They've had, last time I checked, it was over 80,000 people registered for Catalyst to take part in the governance system.
Okay.
So it's the biggest decentralized governance system there is yet. Something else that's different about it is the tokens are native on the chain, and they can actually be created. You will be able to create a token if you want of your own. You'll have to build value to, there, but you'll be able to do that right within the wallet, Daedalus or your or if you want to create an NFT.
It's like just ERC20 tokens on Ethereum, basically same type of deal.
No, because an ERC20 token is more complicated to create. It actually gets created with a smart contract. Okay. This is where a lot of the problems come in, because the smart contracts are not well written. So even with the DeFi, the hacks that are happening, it's often something that's gone awry within the code of the smart contract. But typically you'd have to understand that. So Cardano's doing some really cool stuff where you can create a native token, and it's on the chain. It's not a smart contract. So that's also part of the slowdown in the Ethereum network, is that if you're using Uniswap and you're swapping two tokens, that's smart contract interaction, right? So when it's native on Cardano, in theory, it's going to be way faster, and you're not going to have all that smart contract code running all the time and just bottlenecking things and slowing it down.
Yeah, I don't know if I understand that well enough to make a comment on it, but
and I mean, and there's a few other things, but I'll let that be for now. I was going to pull this up just to talk about this whole issue of speed and transaction. Actually, what I think was the bottleneck with Ethereum was not necessarily decentralization itself; it was the proof of work form of decentralization. Because what's happening with that is you have this mining process, and so then you have somebody does a transaction. That transaction gets sent into a block. That block gets sent to the miners. The miners are racing to solve that the algorithm. The algorithm's racing to solve that. Once they do, then that block gets solved. They say this is the transactions that have happened. They then submit that back to the network. That goes to the rest of the miners. Consensus has to be reached. And that's where all those nodes, all those miners have to come to consensus, or a certain amount of them. So the bottleneck is the consensus, actually. Once the consensus is reached,
no, there's two things. You're right, because the hashing takes longer than if you didn't, let's say you didn't have to hash it at all to secure it or whatever, it didn't have any puzzle to solve. Then that's one piece. So that does make it slower, but then the consensus is the part of the decentralized database that I'm talking about. The data has to propagate across a certain number of nodes. Right. And so that's going to happen on any decentralized blockchain database regardless.
But that's not the part that slowed it down, I don't think. And the reason is because the proof of stake systems are significantly, like orders of magnitude faster in AlphaZero. I have that pulled up for everybody. Yeah. AlphaZero shows. So Bitcoin's throughput is 7 transactions per second, and its transaction time is 60 minutes. Ethereum, as it stands now, as a proof of work system, is 25 transactions per second, so pretty significant improvement, but its transaction time is currently 6 minutes. Litecoin was 56 transactions per second, 30 minutes. Bitcoin Cash, 300 transactions per second, with a 60 to 180 minute wait for settlement. But I'm just going to jump through past a bunch of these and go to...
Can we discuss, so the transaction per second is not the only metric you can look at. So Bitcoin is the most secure by a landslide. And the reason is because it has the most hashing power of how much you'd have to find the website, but there's a website that'll show you how much money it would take to buy like a certain amount of hashing power for like an hour in order to get a 51% attack going on any of those chains. And then Bitcoin's like really high number now. Any of those others is easy. Like Bitcoin Cash there's always a trade-off between the block size and how many transactions per second you do. If you increase the block size, you can get more transactions per second. But then the problem is that you get more centralization of the nodes for the blockchain. So meaning if you like Bitcoin block size right now is 1 megabyte or 1.5, something like that. Mm-hmm. So you can fit the entire Bitcoin blockchain on a 2 terabyte hard drive or something like that. So anyone can do it, and that keeps the nodes decentralized that keep track of the full ledger, which is good. Whereas Bitcoin Cash, if it became the large, because they made it way too big now, in my opinion. I was for raising it a little bit, but they made it so big now that if you were to do that, you'd have to have like, I don't know, petabytes probably or something in order to handle the whole blockchain eventually. And so only people that can have data centers and sands can store it. So there's a trade-off between transactions per second and the size of the blockchain, and increasing the block size. And then whenever you do that, that's also more expensive for the miners, and so the miner, it's less profitable for them, so they don't want to use Bitcoin Cash. And so that's why I said I used to believe in Bitcoin Cash more, but I've become more of a maximalist because it keeps it more decentralized from a node standpoint, and it secures the network better because you have more miners, because it doesn't cost them as much to do that on a smaller chain. So does that all make sense?
Absolutely.
And so it's not smart this is all from proof of work. We haven't touched proof of stake yet, like you're saying. So, and the same thing with Ethereum. Ethereum probably has just a little bit bigger blockchain, and so I don't know what the size of a hard drive you would need in order to store the full Ethereum blockchain. But anyway, those are the problems you run into.
Yeah, and that was the one caveat I was going to state. Absolutely, Bitcoin is the most secure proof of work cryptocurrency
and most decentralized from a node standpoint.
Probably so, although not necessarily the most decentralized from a miner standpoint. And it is actually the miners.
That's true, because you have nodes and miners.
Yeah, it is actually the miners that perform the 51% attack. It's not about getting 50% of the nodes, it's about getting 50% of the mining capability. And, that is sort of somewhat, been an issue, because there are companies, Bitmain and others, who sort of have a corner on the hardware itself to mine Bitcoin. But
and also get a thing, 51% attack doesn't mean that Bitcoin would get destroyed. Let's say what happened tomorrow, they would have to spend a lot of money to do that and overcome the hashing power of all the others.
It's $4 billion
it's a ton of money. And then you'd only really be able to get whatever transactions are probably, this is my understanding, someone can correct me if I'm wrong, but any transactions in limbo at the moment, and if you had enough hashing power to roll back some of the more recent ones. But it's, after a certain point, that stuff gets safer and safer as it gets further down the blockchain, if that makes sense.
Sure.
So it's not like end game. 51% attack happening is not an end game for Bitcoin.
Happening.
I just wanted to say that.
Ethereum Classic has been subject to a number of 51% attacks, and it's still live and strong.
Sometimes you have like safeguard points on some of the chains before they get bigger. But anyway, so get to proof of stake.
To oranges when it comes to proof of work, versus proof of stake. So Cardano's current throughput is 250 transactions per second with a 10-minute transaction time in its current. That was before scalability kicks in, before the side chains come in and whatnot. So it's old data. They are claiming 10,000 transactions per second and beyond. Up to 1 million transactions per second is what Hoskinson says will be possible. Gavin Wood says the same about Polkadot. Now,
so what are they doing? What are they doing currently, though?
This is on data that is right now, or not right now, but recent. Whenever AlphaZero did this research, which if I go back and try to look at the date, 250 transactions per second. Good. So this is January 4th.
What's the Visa?
21. So this is pretty close. Visa does about I think it's close to 4,300 or 43,000. That's a big difference. I know. Actually, I think it's 43,000 transactions per second. Okay. In that range.
I mean, 250 is still quite a bit.
Yeah, but the other proof of stake platforms which have been in existence longer.
Okay, so that's 250, and that's on. And then the
while
proof
we're talking about that,
how decentralized are the proof of stake nodes on just that number? Because in my mind, anything that hasn't happened, that's just theory. So let's go off of what they got.
Right. So there's a number of chains
that's really good if the nodes are still decentralized, but. And then I couldn't speak to the security of proof of stake. I don't know it well enough.
well, and they will. But I'm gonna say pieces. Oh, 2,400. Okay, 24,000. Sorry, 24,000 transaction.
Mm-hmm.
No, it doesn't. Is according to news.bitcoin. Well, it's purported. Anyway, it's up in the thousands. But Tron is 2,000 transactions per second with a 5-minute settlement. IOTA 1,500 transactions per second. Ripple is 1,500 transactions per second with 4-second settlement transaction time. So EOS was 4,000 transactions per second, 1.5 second to settle. Stellar's 1,000 with 4 seconds. Neo, 10,000 transactions per second with 15 seconds to settle. And then you've got Steam was 10,000.
But yeah, like I said, it probably
seconds.
has to do with, like what these are all proof of stake coins, the ones you're listing there, you know?
Many of them are.
Okay.
Yeah, most of them are. Hashgraph has a throughput of 10,000 plus transactions per second with 3 to 5 seconds. And then Solana has a throughput of 29,000 transactions per second.
I just asked you, how decentralized are the nodes? Could an average person fit a full node on their computer? Would be the first question. Are they inflationary? Would be the second question. And then how secure is proof of stake? Would be
the proof of staking actually happens with what are called validator nodes, and so some of these have a couple hundred validator nodes. Some
do they have the full blockchain on that node?
Yeah, some of them will scale up to 1,000 validator nodes. Some of them, so where that ends up going is to be seen. But
we're talking about Cardano right now.
Cardano, yeah, okay. Cardano has hundreds of nodes, and that's increasing constantly.
It just has hundreds.
Yeah, I don't know the exact
number.
So not
thousands.
I don't know the total number of Cardano nodes currently. I'd have to.
How come you're not running one?
Yeah.
You should be.
I got too much going on, but there's another platform similar that's not in this list from Alpha Zero, but it's called Elrond, and it's another platform token like this out of Europe, and they also tested over 10,000 transactions per second with 1,500 nodes. They had 1,500 nodes running.
How many?
1,500 nodes with 10,000 transactions per second with 1 or 2 second settlement times. So all of that basically to say that the issue of transactions per second and bottleneck and whatnot is, I think, just going to now no longer be an issue with the proof of stake cryptos moving forward. And if things go according to how they're being claimed or according to claims, they're going to be as decentralized, if not more decentralized than Bitcoin. The only real question then that needs to be proven over time is that they're actually secure. So like Cardano has
that was what I was saying.
Ouroboros, it's a Byzantine fault, BFT it's called, consensus algorithm, which, according to the research and according to the papers that have been written and all that sort of thing, is provably secure. Obviously, time will tell. Bitcoin has, more than a decade proving that.
Yeah, exactly.
It's been.
Yeah, I could see that the transaction per second, if you had a high enough, maybe you don't have to have the hashing power, just whatever way it's being locked down is, you're not having to use all the power for that. And then you got just with processing power and the internet speeds getting quicker, all that kind of stuff, stuff would be moving at the,
There's still widespread decentralized.
You could get all the information, all the nodes really quickly as that continues to get better over time, and Moore's law and all that kind of stuff, if that makes sense. And so I could see that as just more, whether or not it's secure would be the last piece, I suppose.
Yeah. Which, if that all works as it should, is going, what that means at the end of the day is that, Ethereum set out to be the global decentralized computer for the world, right? With smart contracts, and you could build your applications on top of it and all sort of thing. It didn't really happen because as soon as as soon as CryptoKitties became really popular, it just the whole thing shut down. But if this all works as it should moving forward, we could see some killer apps that are built on top of these platforms, and that
I'm thinking about it now, but the nodes would by nature become centralized, because if you have that many transactions going into it, you're going to have the block size bigger, and then there's more transactions total, like we're talking about, tens of thousands per second. Then that means that chain is going to be much larger, And so you wouldn't have the nodes would be more centralized in data centers. So there's always a trade-off, like I said, in cap theorem and decentralized database. You're kind of picking one. I'm not saying that's bad. Like, I mean, arguably maybe a couple hundred nodes and data centers all over the world is decentralized enough, depending on what the application is, right? So
Right.
I mean the application of what it's trying to do, not
Right.
Does that make sense?
Yeah, it makes sense. And then sort of the solution that the second layer or sharding or side chains bring to the table is that not every transaction gets processed. I mean, that's what Lightning is, right? Those transactions get.
Oh, okay, so you're talking about top layer or second layer transactions.
I'm just saying this is a solution to the problem. You can have that security.
If it's on second layer, then yeah, that's true. It wouldn't, because you would aggregate those until it got to the base layer, and then you could still keep the base layer blockchain small. So when you're quoting those numbers of how many per second, you kind of need to tell me if that's second layer or first layer. Does that make sense?
Yeah. So, but I mean, at the end of the day, if you achieve the same, you have all these side chains or whatever running. Sharding is what Ethereum is calling them, and all these transactions are getting processed, and then every so often that gets sent to the base layer for finality. You can achieve the performance speed that you need in terms of transactions per second, and also have the sort of finality security that, I mean, you can that's what's...
and then I don't know if I meant it, but you lose the history of what happened on the blockchain on the base layer. No, on any of those you would have to by nature.
Oh, sure, if it's not being written. Well, it depends on whether,
because you have to aggregate all the history, because if you kept all that history and you put it down to the base layer, then that's like I said, it'll get it really huge, and then you'd have to settle all those transactions. So the history is lost in that. The balance would be correct, but the history is lost. It's kind of like not having your full transaction history on your bank account. Every so often they wiped out, kind of some of them, and just told you what the balance was, and you just moved on from there.
Depending on the scenario and how you're looking at that, it could be a good thing or a bad thing, though. Right? So
yeah, I'm not saying one or the other, but
maybe you don't need
it depends on
a single last transaction on the
I'm not saying that. Yeah, exactly.
Yeah. That could add an actual, in terms
but the
of
really
privacy, that could add a little bit.
So, but yeah, Bitcoin Lightning Network is basically, it's supposed to be the same thing. I'm not saying I know or think it will work. Maybe it will, maybe it won't. I mean, I hope it does, but it's not. I think it's good enough as it is, and then but I don't know. Humans are pretty ingenuitive. I think we'll figure out what. Yeah, one of these is going to solve it and figure out a way that works, and then it'll most likely be centralized into a couple top coins or something like that. That's just how humans work. There's not two Amazons. There's not. You get what I'm saying? There's not really two Googles. I mean, but it's people tend to go to one thing just because of ease of use, if that makes sense. Everyone will know the name of whatever that one thing is.
It's going to be very hard to unseat Facebook.
Exactly.
In other words.
Not saying it couldn't happen.
Could happen, but not easy. Yeah. This is one of the things that excites me about the cryptocurrency space, is there's never
hopefully didn't bore everybody,
a shortage of things to talk about. So,
you got to understand all that and all those trade-offs, and
Well, it's a little frustrating too, because you can literally research endlessly and never exhaust all of the information that is out there that you might want to absorb about all of this space. So I think it's one of the reasons why so many people sort of think that crypto is just like too complicated to do. But there's all that super complicated side of things, but then there's also the reality is it's getting easier and easier and easier for the average person to just pick up some Bitcoin, hold on to it, and even use it different ways. So it's good stuff. Was there anything else that you wanted to touch on, or were we good to?
Unless you wanted to talk about the whether or not it's more profitable to hold altcoins over the long run, and whether they'll be a treasury reserve asset, which I didn't think that was the case, and you thought it was, and I was explaining why. That was the argument we got in. So.
Well, it depends on the time frame that you're looking at, but really closely connected to that issue is the issue of deleveraging. So I thought about that more after we talked about that, and I went and looked at some of the charts.
About what?
This issue of...
No, what do you mean by deleveraging?
So connected to this discussion about, is it better to invest in the long run over altcoins versus Bitcoin? There's some like fundamental issues that you've pointed out, which are good. That's a lot of the altcoins. If you go back especially to the earlier days that were in the top 10.
Yeah, so let me go back, frame the question, and you say what you're saying. So all I was getting at was that, well, like MicroStrategy, they're picking Bitcoin as their treasury reserve asset that they will hold instead of cash. And you were saying, well, oh, you could hold altcoins and you'd get better gains. I was saying, well, not over a long time period. I don't know if that's the case. Because half of them would, fall down and be worth less than they were previously in the last, 4-year halving cycle or whatever, and then some of them would be more, but it just kind of half and half, depends on which ones. And then that's where we kind of went into that. And
So my argument would be, if you were an early adopter of Bitcoin, at some time after 2009, 2010 forward, then it may be true, if we go back and run the numbers, that you would have done, as well as that, as if you'd gotten to many of the other altcoins. Many of the altcoins that just sort of disappeared. Think of Dash; it was like way up in the top 10 back, and now it's not.
What about Stratus? What about BitConnect? What about Tron?
So many, right? Tron, exactly.
All those are up there.
But that
BitConnect's gone. Stratus is, I don't even think it's in the top 100 anymore. And then Tron, it might be in the top 20 or 30 now, something like that, but it's not where it was.
So, but that's kind of a different scenario. Like if that was you.
In 2017 we're talking about, for everyone's reference. But
but if we're talking about today, the question where I was going more was, if you're coming in today, Bitcoin and Ethereum, number 1 and number 2, are already well established. I mean, they've seen. My argument would be that we're going to see Bitcoin do phenomenally well. I think this bull market, it could. I hate to make price predictions, but it might double from here to 100,000. Maybe it'll 4x and go to 200,000 or more, 8x and go to 4. I don't know, but my point being is that if you go back to a shorter time frame, you go back a year or what have you, and you look at some of the altcoins or many of the altcoins that are in the top 10 or 15 now, if you'd entered, it all depends on your entry point, but if you'd entered in, then you would be seeing significantly greater gains than if you were in Bitcoin or Ethereum. Right?
Over the last year?
It just depends on the time frame, but over the last year.
Yeah.
And the same most likely is true today, is sort of my argument. So, and that has to do with deleveraging too, because I went and I looked, for instance, and most coins, almost the vast majority of coins are, they follow Bitcoin, right? So Bitcoin goes up 5%.
I agree with that.
They go up 5%, maybe 10%. If you look at Binance Smart Chain, if we pulled that up on CoinMarketCap and we looked at its chart for all time, I'll just do that really quickly so we can see that together. It's and you look at it right now and you're like, wow, it's up 23%. It's doing incredible, and it's the number 3 token. But if you look at the chart, I don't know why it's taking so long to load here. What you'll see is that it pretty much is just that's the chart.
What was it at whenever it's flat here? What's the price? Oh, you're overlaying it.
Overlaying it. So what you can see is that, obviously Bitcoin was performing much better, in years past, but of late.
What's the price of? That's a 35 to what?
When do you want to see?
I was just curious. Yeah. So then what is
just like we're right before this.
What's
bull.
Binance at now? Like 280 or something? Or?
Yeah. So, but what I'm illustrating here is that it's following Bitcoin, right? During this bull market, it's like following Bitcoin almost exactly. However, there are certain cryptos, altcoins within the top. Ethereum has not. Ethereum has significantly outperformed Bitcoin during this bull market. If we look,
since the start of it.
Yeah, like significantly.
Yeah, I don't.
The same is true of Cardano. The same is true. So, if you were to take the entire, decade or whatever, and if you were able to enter into Bitcoin early on, then you would be, who cares? I mean, look at Ethereum. Look at Ethereum versus Bitcoin. I mean, at this point, it was tracking. It was tracking. Then we entered this bull market, and boom, Ethereum's the green. It just took off, and it just deleveraged and separated from Bitcoin.
Well, you're measuring it from.
This is the all time.
Which one's Ethereum here? The green?
Ethereum is the green.
Yeah, you're measuring from 2016, whenever it first came out.
Yeah. But the point being is, during this bull market, all right, so that's Ethereum. During this bull market, it deleveraged from Bitcoin, and just like orders of magnitude
decoupled. That's
yeah.
what you're looking at.
Yeah, or
so what I'm saying is,
leveraging.
like I said, I index. I'm not on Bitcoin only, but I'd say I'm 70-80% Bitcoin, so because when I'm indexing, so based on the network effect, like we talked about on my last podcast. But the thing that you run into is, well, if you're saying a basket of those is better, or what is your argument?
Yeah, I don't know.
Or are you saying that if you bought only altcoins, you would outperform Bitcoin? Because I don't think that's true.
No,
because that's basically hindsight bias right now, where you're picking only the ones that are up there now and that are still holding up, and even.
This isn't.
Does that make sense?
Yeah, but it's not hindsight bias because I recognize as far back as 2017 that this is.
But if you took anywhere in the second half of 2017 and you bought, I don't know, any of the top ones then, which would be Ethereum, Bitcoin Cash, Litecoin, XRP, whatever, all those till now, and Bitcoin would outperform them, like even from the middle to beginning, other than Ethereum maybe be the only one, but it's still Bitcoin Cash, Litecoin, yeah.
Litecoin, let's look at Litecoin, let's see.
I would think, or close to it, and then the thing is they drop out eventually.
So
even if you picked like I was saying, Tron, BitConnect, all those, so you got some that'll fall out. I'm not saying that they won't outperform the short term, but the longer the time frame goes on, the less that will happen. And the reason why they get the bigger gains is because it's just nature of market cap. So it's easy, like you were saying, it's easier for something to go from 10 billion to 20 billion than from 1 trillion to 2 trillion, because it takes less money to do that. And there's more people that have 10 billion to put into it in order to make it go up that much. But then that'll happen in the short term, but then the question is, will they continually follow Bitcoin and trail behind it, or they could flip it? But I'd say that's less, and it becomes harder for them to flip it, because once they get to 500 billion, then they have to get another 500 billion to get to a trillion, then Bitcoin might go up by that point, and then there's already enough people. Once there's only so much money in the system, and then once it gets to that place, you can't get there without taking some of that money, well, from Bitcoin, or Bitcoin has, I guess, necessarily secured that spot because there's money in gold, there's money in stocks, real estate, whatever. So if enough people took from those and put more than $1 trillion in it, then it, Cardano or Polkadot, whatever, could flip Bitcoin. Does that make sense? But it becomes harder the larger their market cap, but you get more gains on the smaller ones, but then those gains don't always stick. Something like that over a 4 to 5 year time frame, you'll lose half of them and you'll keep half, something like that. And so I don't know that it's, like I said, I'm an indexer, so I buy a basket, but I'm more heavily weighted toward Bitcoin. I don't know that only buying altcoins would outperform over like a 5 year period, even, or something like that. That's more what I'm getting at. So but yeah, 1 year, as soon as the bull run starts, a lot of times you'll get that though on all the ones that do win, because there's some that have gone like all the old, like I was saying, Bitcoin Cash, Litecoin, XRP. I don't think they've outperformed actually since the beginning of this one, even since like the halving, let's say.
Yeah, it's Litecoin. Yeah, it's the green one. It's significantly outperforming Bitcoin.
No, but you're measuring from further back. You have to measure from
2014.
No, the halving of this cycle is what I'm talking about.
So if we begin in August of 2020 till today, right? So the point I'm
no, but that can't be right, because I don't. Wouldn't you? I think the chart only has to show that. I don't know. Anyway. It's hard to say. You'd have to do a lot of analysis, and it's kind of subjective.
We'll put it to 1 year.
So Litecoin's beating it? So what's the percent gain that Litecoin's had from... That's interesting.
Mm-hmm.
Maybe you're right. But then the Litecoin crashed more from the last high, I guess, is the thing. So it's...
Well, I look at it this way. Bitcoin is like the digital gold, and it's less volatile than the altcoins are.
Yeah, I agree.
When you have a bull run, the altcoins go up higher.
Mm-hmm.
And then, when it crashes, they potentially crash lower as well.
And they might not recover.
They might recover. They might just...
I'll put a 50-50 chance on that or something.
If you want it's like risk tolerance. If you want your risk tolerance is lower, you want to be in Bitcoin. But if you're willing to take on more risk and see greater gains, if you
went from like $30-$40 to 200, so
if you're in altcoins that have good fundamentals, that's my argument. If you're in altcoins that have good teams, that have good technology, that have the ability to market themselves, if they have good marketing funds, maybe the foundation, like in the case of Cardano or Polkadot or some of the others, have millions of dollars to market the thing. you potentially are going to see, you will see, I think the numbers would show much greater gains in any bull market than you would by just being in Bitcoin. But that said, there is always that possibility that they fail or something catastrophic happens, some sort of hack or something like that. So yeah, I mean, that's how I look at it. It's just about risk management. So my my argument would always be,
do altcoins and dump them at the end of
potentially. I mean, maybe, but if they're good projects that are gonna keep
a year and a half after the
building
halving.
value, yeah, like I think we talked about this before. I think your indexing plan is great. Now I recommend a lot of people to do that, but also maybe you do something where you do 40% into Bitcoin, and then you do 40% into alt projects that are within the top 10 or 20 that you have researched and done the fundamental analysis on, that you think are good projects that aren't just going to vanish and disappear. I mean, at this point, I don't think Polkadot or Cardano or, probably even something like Uniswap. I mean, Uniswap's only threat of disappearing is
Ethereum gas fees.
Yeah, but the thing is Uniswap is probably going to become chain agnostic as 1 inch or not 1 inch. There's been a couple that have done that already.
Yeah, Uniswap's really cool if they can continue and not have the issue with the gas fees.
But they're going to become chain agnostic. So they're going to work on the Binance Smart Chain. They're going to work on the Cardano. They're going to work on Polkadot. This is what's been happening. Yeah. And so Chainlink is chain agnostic. So Chainlink is a great one that I don't think it's going to go anywhere, because there's always going to be a need for oracles. Stellar's probably not going. Anyway, there's less chance. This goes back to the Wild West, but with sheriff kind of thing. Like, there's a maturity in the market now that's a little bit different too. So I think some of these projects have better sticking power than some of these things that were happening back in 2017 and earlier. Could I be wrong? I could be wrong, but this is what makes this game fun.
Yeah, I don't disagree with you. Like I said before, yeah, I think, I mean, obviously you've done pretty good with Cardano. It's arguably maybe the best. I don't know. It depends on where you measure it from. But it's one of the best performing ones. Yeah. For sure. So
the idea being then maybe like 40% in Bitcoin to have that sort of lower risk long term. And obviously, anybody that's in crypto has to have a special place in their heart because Bitcoin got it all going, right? And then maybe like 40% in what I would call top cap, or what do you call it when you talk about stocks? Large cap tokens that you've done the research on. And then maybe you play around with 10 or 20% in like some really highly speculative stuff, just in case you get a home run on something crazy. Like a Uniswap or something.
Yeah, exactly.
You got in earlier, whatever. So it's a theory.
Yeah, no, it makes sense. Okay. I like it.
All right, well, I guess that's a wrap. I don't think that we had anything else that we really wanted to cover.
No, I think it's pretty dang long and a lot of stuff, but really cool, neat stuff, I think.
Yeah. Thank you so much for your time. I appreciate it, as always.
Appreciate you, man.
People can find your YouTube channel by searching for Vulcan Trader.
Yeah,
right?
Vulcan Trader on YouTube.
Vulcan Trader.
I don't really care. I'm not trying to make money. I just put out stuff out there to help out people, so I don't have to re-explain things over and over again. That's about it. I'm not, but if it gets big, that'd be cool. But I don't add stuff all the time, but it's good what's on there.
Right. All right. Good deal. Well, we're going to wrap that up. Thank you guys for your time. We appreciate you as always. And be sure to visit blockthrasher.com if you want to jump into a very vibrant group and get some questions answered. The Facebook group is a great place to do that. Facebook.com/groups/blockthrasher. You see the link there. I'll put links into the description for the video and the podcast to the books that you.
Yeah, I'll try to do all the books, all of the different podcasts I mentioned, stuff like that. Yeah. I'll try and give them all to you.
And we'll get that in there. And otherwise, have a great day. And remember, it's always a great day to earn more crypto and it's stack, right?
Yep.
All right. Peace, everybody.
Put that Stimmy check in there.
Stimmy, that sure. Hey, just on a side note, if you put the first Stimmy check in. Man, I'm forgetting the data.
It's like 10 grand now. Yeah. There's a Twitter account. We maybe we'll put that one on there. It's called Bitcoin Stimulus, and they track all the stimulus checks. If you put it into Bitcoin, how much it would be worth.
Sweet.
Yeah. There was someone that did one recently. If you put your stimulus check into GameStop, and it was like 40 grand.
Awesome.
Yeah.
All right. Catch y'all later.